I got it. Yeah, yeah, we talked about it last night. Okay, here we go. Here we go. All right, you ready, Dwayne? Yes, he must be ready. Okay, okay, good. All right, good afternoon, everybody. Today is Friday, the 9th day of August, 2019. And today, well, let me bring up this. Let's start out with this the way I do every day. If you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page. Now, you can go directly here. This is eminitrainingschool.com. You can go directly to there, but you can get to it from our homepage too. Okay, so go there and just scroll down, put in your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor the one-on-one training for you. Hit the send button and you'll be sent all the information you need to get into the live training room. Okay, now the spreadsheet. All right, we had another green day today. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 17 ticks on crude and 12 ticks on the ES. That put us at plus $320 on the morning session. Today it took 15 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 per contract. We took a total of 11 trades. On the month now, we're at $2,137. That's over 7 days, averaging $305 a day. And on the year, we're at $19,688. That's over 141 days, averaging $139 per day. Okay, now that is one contract, 2 hours per day. $2,137 so far, over 7 days. And so far this month, to get our goal for the day, we haven't had to go beyond 2 trades. We had it in the first trade 4 times, and in the second trade 3 times. So that's, I'm knocking on wood. We're rocking it this month. All right, so let's get into that and what we did or didn't do. We didn't do anything with gold today. Okay, that's not to say that gold didn't have anything, but it's to say that we didn't do anything. And I'm scrolling back. Here we go. All right, so there was a trade opportunity right here at 9:32 this morning, a shorting opportunity that I missed. And then it was trying to change directions, and it finally did. And there were 2 more right here that I missed. And another one right here that I missed. Now, this morning I was trying to do a lot of training, so I wasn't hitting all the trades. Okay, once I got my goal for the day, then I was doing more training than the actual trading. But there are a bunch more opportunities in here. There's one right here. There is one right here. And one right here. These 3. Now, the reason these are opportunities, this one, because it bounced off the BBC. This one, because it bounced off the BBC. And the cycle was the right color on both of those. The MA1 was the right color on one of them. And this one, because it closed above the trend line. Okay, then it changed directions, and we had one little short opportunity there. One there, and one there. Okay, and that was it for that section. Then we get into here, and there was a shorting opportunity during the break right there. Now we need to put in a lower swing, which we didn't do until way over here. And then it just flipped around and changed directions, and it was doing that a lot today. just flip it around. But it didn't give us a trade setup, and then it just went really flat. Okay, and that was gold today. We didn't make any money on gold, but we could have. There was a lot of money out there to be made, but we didn't do any because I was doing a lot more teaching than I was trading today. Okay, the euro, we had a couple of break evens on the euro. I missed this long right here. That would have been a break even. I got a break even on that one and that one. And that was our day on the euro. During the break, there really wasn't much here. During the break, there wasn't much at all. Okay, on crude. Now, on Wednesday, here, I gotta take a minute, pat myself on the back. Hold on. On Wednesday, when crude was down here, I was saying look for it to get back up there to 53.55. 53.55 was my number, and here it is. Hang on, it's coming back. Hopefully, that's a lot of drawing objects. Not only did it go to 53.55, but it went all the way up to 54.70. So there was great opportunity in there for everybody. But today, let's start out. I mean, today crude was on a tear today. I don't know what happened, what put it on a tear, but it was. We had a break even on the first trade, break even on the second trade, +5 on the third trade, +10 on the fourth trade, break even there, +2 there, and a break even there. And I didn't miss too many trades today on crude. I don't think. And let's see, during the break, there was a shorting opportunity right here, a long opportunity right here, and that's it. That's all there was. So we're +17 on crude this morning. Okay, and the ES, we had 2 trades on the ES during the morning session. Donnie, can I explain again what the blue and black looks like red lines mean and how they apply to trading? Was that for me, Donnie, or was that for Dwayne? Anyway, I am going to scroll back to the beginning of the day. Here we go. Now, this is a weekly trading zone right up here. It's at the high of the day. Okay, price went up there this morning. First thing in the morning, it went right up there. We didn't have a trade set up there, but when it came off of it, then we were selling it. Okay, right here we had a shorting opportunity on the close below the trend line right there. And we picked up 8 ticks on that. That's where we got the goal for the day, was right there. Then the slingshot got all messed up and didn't give us any opportunity until actually right here that I missed. There was one right there that I missed, and another one right there that I missed. And like I said, I was doing more training than trading this morning, so it was a great day to be trading. Another one that I missed right there, that would have worked out just fine. 2 more right there, that would have been profitable. 2 more here, that would have been profitable. And then finally I got back on the wagon and took one right here. On this one, I picked up another 4 ticks. Okay, and then we're at the end of the session for the morning. There was a shorting opportunity right here during the break. It got really choppy in there. I wasn't watching it, but it got really choppy. There was a nice shorting opportunity right here during the break. And nothing else. It was just really choppy. Okay, and that was it for the morning session. that was it for the morning session. All right, we'll go back to the spreadsheet. Here we go. Today, if you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 9th day of August 2019. Made 17 ticks on crude and 12 ticks on the ES. Put us at plus 320 on the morning. Today, took 15 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades. On the year now, we're at $2,137. That's over 7 days, averaging $305 per day. I'm sorry, that's on the month. That's not on the year. On the month now, we're at $2,137. That's over 7 days, averaging $305 per day. On the year, we're at $19,688. That's over 141 days, averaging $139 per day. Okay. Yeah, if you have not taken the free trial, go to the home page here at CFRN.net, and right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page. You can go directly to this page, eminitrainingschool.com, or you can go through our homepage. But if you click that, you'll be brought here, where all we ask for is your name, your email, your phone number, and you can tell us your biggest trading challenge so we can tailor one-on-one training specifically for you. Hit the send button, and you'll be sent a confirmation link. You'll be sent all the information you need to get into the live training room. Okay. Okay. And that's it. With that, we can send it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Ready on the left, ready on the right, ready on the firing line. Okay. And thank you, Joan, for the feedback. We did get the audio on YouTube up and running.
Did you answer Donnie's question earlier?
I did not. Would you like to?
Okay, I can, yeah, sure. I can do it, but I want to make sure he's listening. Donnie, you still listening? You gotta type something in if you're still listening.
We'll take a Y, an X, smiley face, whatever you got.
Anything. Okay, well, I'll answer. Okay, good. You are listening. Okay. Can I explain again what the blue and black looks like red lines mean and how they apply?
I think you're basically just kind of asking for just to kind of run down on what all of them are telling you.
Well, let me go through that.
Okay, dope.
I mean, when Dwayne's doing it, he's doing it on a 30-minute chart. Okay, when I'm doing it on a 4-tick range chart. And what it means is the red and blue line, you know, the rules. Let me bring those up. Where are they? Are they over here? Yeah, they are. These are the rules for the trade setups that I do in the morning. Now, you can use these on any time frame, and they still work on any time frame. The difference is the risk management. Okay, because on a larger time frame, you're gonna have larger risk. But on a nice small time frame like this one, you don't have to risk any. Well, not any, but you don't have to risk much. Okay, and that is in the handout section of GoToWebinar right now. You can download that right now if you want to.
Now, the secret your broker doesn't want you to know is that you can navigate on that larger time frame as I do. Then when you see the setup, you can drop down to the range chart that you're trained on every morning to actually execute. So you're getting the benefit of the larger vision and the benefit of lower risk by executing on the range chart. Keep going, Michael. Sounds good.
There you go. Here you go. And I mean, and that's exactly right. You know, when you see the larger time frame pulling up to the BBC, you expect it's going to start going down. All right. If it's pulling up to it, you expect it's going to start going down. So on the smaller time frame, if you have shorting opportunities, you know, that could give you a bias, and you know, only take shorting opportunities until something changes on the larger time frame. You know, you can just take shorting opportunities. And if on the larger time frame it's pulling down, the BBC is the green line right here. I'm sorry, I just assume everybody knows what the heck I'm talking about. The BBC is the green line right here. The MA1 is the red and blue line. The black step line is this line right here. Now, I use the black step line to disqualify trades. Dwayne uses it to exit trades, on the larger time frame. But, for me, if the MA1 and the black step line are above the BBC, I'm looking long. Okay, and if they're below the BBC, I'm looking short. Okay, that's what the difference is. And if you want to have a one-on-one with me, I'm happy to go over that all over again in much more detail. Okay, so just let me know. You just have to email me. Okay, tech at CFRN.net. TECH@CFRN.net. Okay. Okay, and with that, well, first I want to make sure that I answered your question to your satisfaction. Did I?
Now, Donnie, I'll add that while maybe that kind of seemed like a lot of stuff all at once, it's really not. But what he just explained to you, I mean, that's sort of, the core of the philosophy. Is not like you'll come in on Monday and all of a sudden you'll see some different squiggly lines or something new that you got to learn. If you're in the live training room today, he covered everything that's part of our fundamental methodology or technical methodology. We don't do fundamentals. In fact, we stay away from news. But
try to stay away.
Yeah, right. And so if you understand that here, let me grab the charts, I guess.
Well, hang on, I wanted to
Go ahead.
Before you grab them, let me just show one more thing. These are the way this is how the markets work. Okay, you have a leg up, a pullback, a leg up, a pullback, a leg up, a pullback, a leg up, and then you have a deep pullback. That's when it changes directions. Then you have a leg up and a drop, a leg up and a drop, a leg up and a drop. And what we want to teach you to do is to get in here and get out there, and get in here and get out there, and get in here and get out there, and to recognize when you get a deep pullback like this and it exceeds the prior swing low, you're changing directions. So you're selling there and buying it back there, and you're selling there and buying it back there, and selling there and buying it back there. Okay, so you make money on each leg, and you're not risking a lot, and you're not in the market. You got to remember that anytime you're in the market, you're at risk. Okay, anytime you're in the market, you're at risk. So we want to get you in and out, pretty quick, and let you have a lot of opportunities to make money. And today was a great day. We did what, 320 or something like that, but
Nice.
But I missed a ton of them. Yeah, but
that's just one contract.
Yeah, that's one contract. But I missed this one right here that would have been profitable. That one, that one, that one. All four of those would have been profitable trades. And and that one, and that one, and that one. All of them would have been profitable trades. Okay, because I was really trying to do more training this morning. Then once I got the goal for the day pretty quick, then I went into training mode.
Pop open that gold chart if you can. Can you make that full screen?
Yep.
Okay, now go over to, what was I just looking at? Well, go all the way over to the end, current,
Oh,
to the right.
Okay.
Yeah.
Okay.
Now, you see that last pullback to the BBC? Not that, yeah, that one right there. Can you put a little circle on that?
Mm-hmm.
Yeah, and then make those indicators disappear.
Okay.
Okay, now, it was very obvious with the indicators on that we had an opportunity to go short right there. We take the indicators away, you still have the same price information. The price is the structure, everything's the same. What the indicators do, Donnie, doesn't matter what market you apply them to or what time frame. because what we do, what we teach you, is fluid across all markets and all time frames. Job of the indicators, once we deploy them on a market and a time frame, is to go in and detect the underlying rhythm of that market in that time frame, and then highlight it in such a way that you can see where the high probability, low risk entries live. So just looking at this chart without the indicators, it's the same candles, same rhythm, but to the untrained eye. Now, Michael and I, we've been at this so long and used our indicators so long, we can spot them pretty much even without the indicators on. So it's really there to, but I still use them because why would I want to second guess? So now when Michael lays the indicators back on, you see that pullback, the one he circled, it's just, well, how do I know that that's where I should be looking to go short? Well, when he drops the indicators back on, bang, crystal clear.
There. Off the BBC. Separation down here. Good separation down here. And you see I drew with the highlighter here the way that the market did move. That's the way that it did move, and that's the way that it always moves.
Day
it can
after
get
day,
choppy.
week after week, year after year.
Yeah, we've been doing this a long time.
Yeah. So what you learned today, now on Monday, you hear the same thing over again. So you won't hear anything new, but each day, as you hear the same thing over and over again, the clouds will start to part. It will begin to make sense. You'll truly start to understand it. And probably by this time next week, you'll go, oh my goodness, that's so simple. Why didn't I see that clearly last week? Again, we're not going to add anything. We're not going to teach you anything new. You're just going to see it repeated again and again and again until it's like pieces of a puzzle sliding into place. And suddenly you can see the picture that's on the box, the puzzle box. Okay. Any other questions, Donnie? Now, I love your answer, sort of. I love those kinds of honest answers. When I explain something to somebody and I go, okay, now, does that make sense? Yeah. I mean, you can just tell by the quality of that it didn't really lock and load. So when you let us know, Michael or either one of us, that, English is my first language. I heard everything you said, but I don't know that I understood it. We'll back up, go over it again. Back up, go over. And that's, Donnie says, I'm still learning slowly. That's a beautiful way to learn. There's no rush. We're not in a hurry. Trading's a journey, not a destination. I couldn't resist. That's what, Donnie. If you can just, if you're patient with yourself, don't try to, understand and know everything there is to know all at once. Just show up, watch the chart, listen to Michael, watch the rhythm of the market, listen to the rhythm of his voice. And pretty soon, that little voice in your head will start saying things before Michael does. That's going to take a little time, but it never gets any more complicated than what you see right here, right now. That pull back to the BBC where the circle is. In essence, that's all you're doing every day when you show up to work to trade our methodology, is you're waiting for a price to pull back and give you an entry.
Mm-hmm.
Okay.
That is it. Okay.
All right. And let's see, David, the problem for me was unlearning all that I had learned. That's
the baggage.
True. Yeah.
Yeah.
What you have to do.
Most of our people are like that.
I'm sorry. Go ahead.
I was just going to say, most of the people that come to us, they've tried every other thing before they get to us, and they're down to the last $2, and and they want us to help, and we do the best that we can.
But first, we got to clean the slate.
Yeah, but you got to clean the slate. You got to come in here with no other indicators on your charts. Shouldn't have anything that's not on my chart on your chart. And if
Now,
you do,
why do
it's
people
going to be
show
a
up on our
distraction.
doorstep last instead of first? Because we're not
Right.
sexy. Because we don't tell big old lies on our website or in our
Yeah.
emails or in any of our promotional stuff.
We don't guarantee.
We just tell the truth. And so, of course, human nature, people are going to be attracted to the shiniest object on the shelf, the one that makes the most promises, no matter how outlandish they are. And here's the real rub: if you're new to trading, you don't know that that promise is outlandish. If you're looking at two websites and one says 20% of our trades get stopped out, and you look at another website that says 98% profitability or success rate or whatever they label it. Well, number one, it's a lie. You being new, you don't know it's a lie. And so, any smart guy is going to choose the one that has a 98% success rate versus 80% or whatever the other number is. But we answer to a higher authority, not just the NFA and the Attorney General, but the big guy in the sky. And, when I meet him someday, I don't want it on my rap sheet that I lied to a bunch of people about trading. I mean, I don't need that baggage for eternity, for sure. So, all right, I guess I'll take the charts now.
Yeah, okay. Look at that huge move down right there in gold.
Nice.
And you know what it's going to do on, well, I like the 15-minute candle. I know you like the 30-minute, but I like the 15-minute candle.
And you know what,
all the
guys?
time.
Let me just say, there's no magic time frame. Michael likes a
There's not.
15 for larger. I like a 30. The only magic in any time frame is the magic that you bring because you've been watching that time frame for a long enough period of time that you sort of understand what the rhythm looks like in that time frame under normal market conditions.
Now, here's what I think it's trying to do. Now, I want to show you something else too from last night, Dwayne. I think it's trying to get down to the low of the day, and if it does, it's going to pull back up and get back up there. That's what I think it's going to do. And you can have a bias right now on the short side, only trade shorts, while it's trying to get down to the low of the day. And then once it does, and it starts pulling back, it's got to retrace some of this move down. This is what it's doing right here. It's retracing this move up right now. But if it doesn't do 100% retracement, it's done about a 60% retracement right here. And down here, this is very bullish down here, but it's it's not bullish up here at all. But on the smaller time frame, you bounce down to the smaller time frame. You gotta look at what's in front of you. You see right here, this just disqualified short trades. So I think it's trying to get back up right now. It's done that retracement that I just said. Then go here, 15 minutes, and let me draw fibs on it. Now, fibs are built into our indicators. I don't know if you know that. Oops, didn't mean that one. Well, some of the indicators. But here we go. See, that was the whole move right there. And so, yeah, I drew it the wrong way. Sorry. But yeah, there's right here is the 61.8 fib, roughly. And
We call it the 62 just to confuse people.
yeah, just call it a 62. Yeah, it is. But it pulled right back down to that, and right now I think it's trying to get back up here. So now on the smaller time frame, I think what you're going to see is some long opportunities for it to get back up to like this level up here. Okay, that's what I think you're going to see. I don't know. I just trade what's in front of me, but that's what I think. Okay,
Alrighty.
I mean, I know that's a whole bunch of information, but
But you've basically heard it all. Now, everything that you've heard today, you just gotta, you'll compartmentalize those different things. They'll become layers, and as you layer them all together, it just presents you with a crystal clear picture, not of what the market is going to do next. See, the other websites, the sexy websites, they tell you that they know what's going to happen next. But that's not true. God didn't create the universe that way. When he was pouring the ingredients in, he decided not to give us the ability to change the past or know the future. So all of these websites that tell you they know what's going to happen next, well, they're stretching the truth. We tell you the truth, and that is based upon our methodology and our analysis. We know with a high degree of probability what the next high probability move is. World of difference between the two. It is not impossible to know what the next high probability move is, but making the statement that you know the future, man, that just flies in the face of creation. God don't like ugly. So anyway.
okay. I got a phone call with Brian.
All right, buddy. I'll
So-
take it from here.
Okay.
Thanks. Okay, pull the charts back over to my side of town. Maybe, maybe not. Did they move? Come on now. For some reason it's not updating on my other monitor. Hang on, let me check. Yeah, you guys got my chart. Yeah. Okay. Perfect. All right, let's go to the S&P. We'll start there. Okay. I'm going to rip through these. You know what? No, I'm not. I'm not going to rip through anything. I'm going to go back and do what I originally started to do, because I think that's important. And we'll cover the other stuff along the way. So if you can get this picture in your head, this will really help tremendously. And that goes for everybody, not just Donnie. That was the Globex Open last Sunday night. Right there. As I said earlier, we go to work Sunday night, 6 p.m. Eastern. We keep our foot on the gas right on up until Friday afternoon, 5 p.m. Eastern. Price is always trying to get to a weekly trading zone. If you've ever played that little video game, my kids love it, or they used to when they were younger, I guess. The Mario Brothers, or the little guy. I mean, if he runs into a wall, he turns around and goes the other way. If he runs into a wall there, he drops down. Or he's always on the move. He never just sits down and goes, wah. No, he's on a mission. Think of price the same way. When it gets to that wall, that door, that whatever, if the door doesn't open to let him through to get to the next door, then he's going to turn around and I can't make this sound very good, but that's what happens. Price is on a mission. Price is always trying to get to a weekly trading zone, either the one overhead or the one below. When you're able to determine, based upon what we teach you, the indicators that we provide you with, you start to see where little Mario is trying to go. Partners and passport holders receive the zones every Monday morning, 6:15 a.m. Eastern, before Wall Street wakes up, so that everyone has an opportunity to get their zones on the chart, ready to go. Now, of course, many of us, passport holders, we've been working through the night, trading the Asian session, the London Open. So, many days, our traders, those who trade the overnight session, they're done long before Wall Street ever opens up. Sometimes they're done for Tuesday before they go to bed Monday night. So anyway, all right, now we've got the framework, which is the zones. Think about the zones sort of like well, I gave you the video game analogy. Think about a football field, the gridiron. You're looking down on the field, you're sitting up in the bleachers, and you're right at the 50-yard line. Well, going left, you got the 40, the 30, the 20 to the end zone. And to the right, the 40, the 30, the 20 to the end zone. That is, once you put the zones on your chart, that becomes the playing field for the week. Most weeks, price will stay on the playing field that you put on your chart Monday morning. Last week, as an example, we had a lot of downward momentum. Price did trade below the lowest weekly trading zone. Now, we've been publishing the zone since December 14th of 2009. Most weeks, it stays on the playing field. There are weeks like last week where it wanders off. Typically, when it wanders back on by the close of business on Friday. Last week, it did not, as I recall. All right, so Globex opens. Here's price. There's a big red candle there, and we had an alert that went out to consider being short, 29.24. So that alone gives you a pretty good idea of where price is trying to go. It's trying to go to the zone below. If we add this, it becomes a lot clearer where price is trying to go. Just remember, when price is below the BBC green line, all that means is when price is below the green line, we're bearish or we anticipate lower prices. When price is above the green line, the BBC, we're now bullish because we anticipate higher prices. How long do we anticipate lower prices over here? Until we have a bullish cross, until price gets above the BBC. Now we're looking long, looking short, looking long. So price is below the BBC. So that there tells us that price is trying to get to the zone below, because price is always trying to get to a zone, either the one above or the one below. If, when price is below the BBC, we anticipate lower prices, add them up, carry the one, bang, that tells you that we're trying to get to the zone below. Does that mean we're going to get there? No, that would be akin to knowing the future. I can't tell you with certainty. I had that exact question this morning in the Telegram channel. The question was, Dwayne, is price going to the zone below? My answer, price is below the BBC. Therefore, it is attempting to get to the zone below. And I went on to say, look left to see if there are any obstacles in your path. And I'll explain what that looks like as we get to it here. So we're below a zone. We're below the BBC. So we know the high probability thing for the market to do is to go to the zone below. And we can see that it's trying to do that. And we have an alert that said, consider selling 29.24. Now we can see that, now this is a historic chart. Anybody can look like a genius with a historic chart. I'm not trying to look like a genius. What I'm showing you here is, let me just scroll over real quick, then we'll come back. See, this is live real time. So I don't want anybody to get hung up on thinking, oh, well, yeah, that's historic, anybody can, no. See what happened right here. Price got below the BBC. We anticipate lower prices. What do we get? Lower prices. price always reverts to the mean. So as you get a leg, when that leg runs out of steam, price is then going to revert to the mean, the BBC. When price hits the BBC from below, we expect it to be good resistance. So what are we looking for here? Well, what if price gets up above the BBC? What if we have a candle close up above it? Well, then we have to embrace this possibility. But as long as price stays below it, this is the only possibility that we're focused on. Okay, so now we can go back. We have what's called an exit signal. Price is dropping. We know that it's a high probability. We're going to the zone below. We can see that price is trying to do that. However, as I just showed you, price will put in a leg and then it will retrace. Put in a leg and then it will retrace. Put in a leg and retrace. So once you've had a nice leg like this, a retracement can turn into a reversal. Like I just showed you a second ago, if price on this pullback closes above the BBC, then the retracement becomes a reversal, right? So if we don't, we've racked up this profit, we've earned this profit, okay? We didn't win anything here, we earned our money because we were able to look at the chart, do our analysis, create a narrative, so we're short. When price starts to walk sideways like this, that's the market telling you, not some guy on TV or the radio or some joker on the internet. The chart is telling you that this move is kind of running out of steam. It needs to retrace, gather some energy so that it can continue in that same direction. So when price starts to walk sideways, this black line that you were asking about, Donnie, when it crosses over, the first green candle that closes above that step line, we call it, because it looks like a set of stairs. Price crosses over, you get a green candle that closes above. That candle closed at 2,900 and a half. That is our exit signal. So an entry at 29.24 per the alert to, we'll just call it 29.01 so I can do the math in my head. 29.24 to 29.01. That's a 23-point move in the S&P 500 Emini Futures. And a 20-point move in the S&P is pretty good. 50 bucks a point. That's $1,000 per contract traded. If you're a trader who has earned the right to trade 10 contracts, that's a $10,000 per contract move on a Sunday night. Now, okay, that sounds real good, but could a person really trade 10 contracts on a Sunday night? Isn't everybody watching The Wonderful World of Disney? I remember as a kid, it always came on Sunday night at 8 o'clock. It was a big night. Okay, the candle that triggered, the 30-minute candle where our alert triggered, it's going to be this candle. It's going to be that candle down here. Now look at the little pop-up. During that 30 minutes, 31,000 S&P 500 E-mini contracts changed hands on a Sunday night. The next 30-minute candle, 37,000. The next 30-minute candle, 34,000. Next 30-minute candle, 28,000. So, could a person really trade 10 contracts on a Sunday night, expect to get filled, not have any major slippage? Well, the answer is yeah. I mean, I think a person can see that you could trade 100 if you've earned the right to trade that many. And I won't go into all the details of earning the right to trade that many, but it's a process. We are we use aggressive risk management, not only in trade execution and the setup itself, but in the overall business plan. Part of our 24/20 blueprint is teaching you that you need both a business plan and a trading plan, and the blueprint helps you to develop both of those. Okay? All right. So there's an exit signal, which means you're out of the market. If you're trading per our methodology, the way that we teach, on the close of this candle, now you're flat. Okay. What if another alert doesn't come out? As you saw Michael do this morning in the live training room, you draw a little trend line across the bottom of those candles. Now, we want price to pull back to the BBC. That's our highest probability entry. But sometimes, as is the case here, there's so much downward pressure on the market, it can't pull all the way back because it's just in a hurry to drop. So we draw a trend line across the bottoms. Now, we're hoping it's going to pull back. Come on, come on, come on. And it doesn't. Okay? When we close below that trend line, this red candle, when we close below that trend line, we'll take an entry on the open of the next candle. As we approach this weekly trading zone, we expect it to be good support until it isn't. So a trader might choose to exit there and go flat. There is no exit signal here. The next exit signal doesn't come till right here. So you can exit or you can stay with it. What do you have to do to stay with it? Nothing. Doing nothing. That's how you stay with it. All right. So price goes from this zone to this zone with pretty clear guidance. We knew up here what the market was trying to do. That's no guarantee it's going to do it, but we knew what it was trying to do. I always side with the market. If I can detect that the market is trying to get to the zone below, I'm going to put my money with the market. Never going to fight it. Never going to swim upstream. I'm not going to try to argue with it. No, I saw that economic report this morning, and there's no way you should be going lower now because the economy is good. That's just nonsense. Just stay away from that kind of stuff if you want to learn to be a technical trader. Now, fundamental traders, they have their own way of doing business. I'm not gifted in that area. I've traded news and had mixed results. Sometimes I was profitable, sometimes I wasn't profitable, but over a large enough sample size, break even at best. At best. So that's kind of like gambling. I mean, if you go to Vegas and break even, you think you did good. Maybe I'll become a professional. Because in Vegas, breaking even, that's rich. Okay. We're still below the BBC. So when price closes below this zone, and this candle opens, it's a little early on, but this is what the signpost is saying. Anticipate lower prices because you're below the BBC. Down we go. We catch an exit signal right here. So if you had, let's say you took this entry, and then you took this entry, and you chose to get out here, just because you know that a zone is good support. As price approaches from above, it's good support until it isn't. So maybe you took an exit. You want the market to show you that it's going to really try to get to that zone below. Okay. So we close below it there. We close below it there. Perhaps you take an entry here. Okay. Your exit signal would be there. When you get to this zone, you're confronted with the same situation again. Okay. Anybody have any questions on anything I've covered? Because if you can grab a hold of this, what I'm explaining right here, right now, if you can grasp this, if you can look at the indicators, look at the framework created by the zones, there's a high probability that you can be on the right side of the street. And the right side of the street is the side the market's on most of the time. Okay. All right. So we drop to yet another zone. Price trades through it. Trading through that many zones consecutively, a little unusual, but now there are reasons, fundamental reasons, why many will explain to you why this happened after the fact. They don't explain it to you before, right? But it's another story. Let me shrink this up. Okay. So we're moving along. Price trades through that zone. You get a nice close below. Okay. So using the logic that I just explained, looks to me like the zone's trying to get to the zone below, right? Okay, so maybe you get short here. Maybe you take an entry on the open of this candle at 27.97. Price drops to 27.75. About a 20-point move. And then it stops. And when it prints this little doji here, above that step line, you haven't quite got back to your entry, but you're now on the wrong side of the street. You're on this side of the street, price was falling. Price is no longer falling. Price is now pulling back. And you're still out here. Got to get out of the trade. Maybe it's not a profitable trade. Maybe you didn't get as much as you could have taken. Maybe you didn't earn as much as you could have earned, had you got out here. But getting out of the swing low or swing high can only be done by accident, because we don't know it's a swing high or swing low until after the fact. Okay. All right, so price pulls back up to the weekly zone. We expect it to be good resistance until it isn't. So there's 30 minutes, there's an hour, there's 2 hours. After 2.5 hours, with this green close above the weekly trading zone, it appears price is trying to now go to the zone overhead. Okay, but we're still below the BBC. All right, at the close of this candle, we're above the zone, we're above the BBC. Certainly looks like price is trying to go to the zone overhead. Now, let me scroll over just a little bit here. All right. Now, price has just put in a leg, a pretty healthy up leg. It's the beginning of the new direction. This candle alone right here, this big green candle, it opened at 28.18, closed at 28.39. That's a massive candle. The average swing in the S&P 500 is 3 to 5 points. So could you enter on the open of this candle? You could. You absolutely could. But you got to know that after a move of this magnitude, price is going to try to revert to the mean at some point. In other words, it's going to pull back to the BBC. All right. I know we're above the zone. I know we're above the BBC. I know we're trying to get to the zone overhead. But I want an entry that has as little risk as possible. So instead of entering here, if I'm patient, the market just might hand me an opportunity like that. The price pulls back to the BBC. If I enter, and this is a spot where I might drop to my 4-tick range chart and pick off my entry here so that my risk is minimal and my upside potential, the zone overhead, is much. I love that equation. Risk little to gain much. And what did price ultimately do? It walked right up to the zone overhead, and we expect that to be good resistance until it isn't. We run into the resistance, we consolidate. Only three things can happen at a weekly trading zone. The most likely thing to happen is what you see right here, consolidation. The second most likely thing, do I have an example right in front of me? No, I'll show you as soon as I see one. The second most likely thing is rejection, and the least likely thing is what we call the slice. I do have a slice right here. You see how this 30-minute candle just sliced through that zone like it wasn't even there? It's the least likely thing to happen, but it's one of the three things that can happen. And typically what will happen when you get a slice, price will, once you find your support, it will retrace back up to the zone you sliced through. In this case, confirming good resistance, and then continue in the direction of the slice. That didn't happen this time. Doesn't change. This would have to happen 900,000 times before I would change my narrative that the highest probability thing, given this scenario, slice, pull back, continue the direction of the slice. That is the high probability thing. It just didn't do that this time. That's why we use stops. Okay. So we've already covered up to here. Okay, now price can't get through the zone. So remember the Lamario guy. You know, he's up there trying to get through that thing, whatever that thing is. When he can't get through, he's going to just give up and turn around and go the other way, right? So when we get to the BBC, what do we expect? We expect it to be good support until it isn't. Okay, let me open this up a little bit. Yeah, there we go. This red and falling CFMA1 represents potential resistance. So what happened? We went up, hit resistance, turned around, came back down. Okay. On this move, when we get below the BBC, now our narrative changes, because as long as we're above the BBC, we expect higher prices. Once we get below, we expect lower prices. If we look left, and that's real important, okay? If we look left, we can see that on this pullback, the market found support right in this area. It found it again. Now, back over here, we had an alert to be long 2865. There's a 15-point move up to the zone. Okay. So then we come back to the BBC. When price can't get through the zone, it's always going to come back to the BBC. It's going to do one or two things. It's going to bounce and go back to the zone, or it's going to fall through like it did. Let's say, as an example, you get this close below the BBC, you decide to go short, price gets back above the BBC, you exit the trade because you're on the wrong side of the street. Now, we had an alert there to consider being long 2875, okay? And we ran up 13 points. We hit the zone, we spiked it. Zones are an area like fibs. Sometimes we turn on a dime, sometimes we spike it a little bit, sometimes we come a little short. I'll show you some of those here in a minute. But what is this? Consolidation. Only three things happen at a zone: consolidation, rejection, and the slice. Okay. As we come back down to the BBC, price trades through it. Okay. On this close below the BBC, the open of this candle, pretty obvious price is trying to get to the zone below. And it puts in a real good attempt. Now, I showed this earlier on the daily chart. This is a 30-minute chart, equally as important. After an extended move like this, the price where you get the bullish cross becomes very important. It becomes important like that. Price is making a good effort to get to the zone below, but it runs into good support reverses course. When that happens, we expect price to revert to the mean. When it gets there, we expect it to be good resistance. It is. We don't get back to the same support level because we had a leg or retracement to leg. Now we can clearly see that it was leg, retracement, leg. Important prices, important areas are almost always tested. What does that mean? Let me explain. We had an alert to be long 28.75 up to 28.80. Okay, 5-point move. Love it. Price gets back below the trigger. We actually had an alert to get short down here. So you could take advantage of the long, take advantage of the short, and then price marches right back up, triggers a second time at 28.75, goes right back to the zone. The difference between this and this is on the pullback to the BBC right here, it didn't hold. Traded through it. Okay, so now we're trying to get to the zone below. Over here, after the consolidation, most likely thing to happen, we pull back to the BBC and we don't fall through it. The BBC holds. It holds more often than it doesn't. That sends us north. So now we're above this weekly trading zone and we're above the BBC. So it becomes pretty obvious to those of us who've been watching this for any length of time that price is trying to get to the zone overhead now. Okay. On this candle right here, we had an alert also to go long at 28.95. The price walks right up to that line in the sand, backs off, runs at it again, pulls back. Now, we talked about this in the workshop last night. We're above the zone. We're above the BBC. And on this candle, see that wick? Now that's rejection. That's the second most likely thing to happen at a zone. Price touches it and just runs in the other direction, leaving the wick in its wake. It reached down and touched it, almost like some sort of obsessive compulsive thing. Just had to do it. It just had to say, hasta la vista, baby. And so by the open of this candle, I'm pretty sure price is trying to get to the zone overhead. See, I don't have to know that it's going to get to the zone overhead. All I have to know is, with confidence, it's trying. Because remember, it's bigger, taller, smarter, prettier, and has deeper pockets. So I'm always going to side with the market. So if the market shows me it's trying to get, I'm rooting for the market. Go market, right? Let me shake my pom-poms. I want to be with the market. I want to root for the winning team. And that's always the market. Okay? Profitable team. See, even I get caught up with that word sometimes. Got an alert to go long, 28.95. So we get a close above that trigger. See, we're above the zone, above the BBC, above the trigger. Everybody can see prices trying to get to the zone overhead. Go from 2,900 to 2,932. That's a 32-point move in the S&P 500. It's $1,500 per contract traded. For the 10 contract traders, 15 grand. And an exit signal prints right there at 29.27. Yes, it was trying to get there. And it ultimately did get there. But when I get this right here, I'm not taking any chances. I have a profitable trade. I'm going to take my profit right there. Wherever I entered down here, when that shows up on my chart, I'm out of here. Price continues up to the zone as we suspected it would, because that's what it always does. We then pull back to the BBC. We expect it to be good support till it isn't. It was. And it took us from 29.22 up to 29.35, 12, 13-point move. Little Mario, He gets to that door. Dee-dee-dee. Can't get through. He's not going to fight it. He turns around and goes the other way. Runs into another wall known as support. Dee-dee-dee. So he's just walking sideways here. Price gets below the BBC. And then there's that rejection again. So I just had to reach up and just touch it. See ya. And off it goes in the other direction. It's now pretty obvious. Price is trying to get to the zone below. Okay, party on, dude. When we hit 2,900, we run into support. Remember over here we said consider buying 28.95. So as price comes into that area, we know that important prices, important areas are almost always tested. So we have to believe that this area is going to be potentially good support. In other words, it is an obstacle in the path of price getting to the zone below. Buyers came in early. What does that mean? Anyone who participated in this move loved it. It's awesome, right? Well, some people may have missed that. They were walking the dog, making a sandwich, whatever people do. They didn't get this. So as price pulls back into this same area, right, they don't want to get left behind again. So if enough buyers around the world start jumping in, price doesn't even have a chance to get back to that good support area. They come in early, they start buying, we push price right back up. We expect the BBC to be good resistance until it isn't, right? But we need to see evidence that it's good resistance before we put on a short trade. We now have evidence that price is trying. Before we got a short entry, we have evidence now that price is trying to get to the zone overhead. See, we just flow with the market. Hey, whatever you're doing, market, it's cool with me. So where are we at right now? We got a swing high, 29.2775. So a nice trade, a radio freebie. Let's go. $29.30, $29.32. Trail if possible. What does that mean? It means if the chart's not telling you to get out, then you just might want to stay with it. I mean, 2 points, that's a great day. You might just want to stay with it to see if it goes to the zone at 35. There's a zone above that. It might decide to go there on a Friday afternoon. Embrace all the possibilities. Any questions on any of that? I just covered a lot, but if you followed it and if you understand what I said, none of that ever changes. None of that is based on any specific type of market conditions, economic reports, nothing. What I just said, it's carved in stone. It's the same thing. Day after day, week after week, the market is going to do nothing Sunday night that it didn't do today. It may do it a little differently. It may display itself differently, but the underpinnings, the inner workings, the rhythm, it's the same. It's going to march until it can't march any higher. It's going to reverse and march until it can't go any lower. And then it's going to reverse and march higher until it can't get any higher. And then it's going to turn around and go lower. Over and over and over. One has to wonder why, if it can be that simple, why does everybody make it so doggone complicated? With 10,000 indicators, magical indicators, mystical oscillators, crystal balls, and holy grails. and tomfoolery. I'll tell you why. Because you can make a lot of money selling that tomfoolery. Lots. Fibs are baked into our indicator set. Yet there's an outfit out there, I won't call their name. They got a $20,000 tool that people buy all day long because of the promises made. It'd be 20 grand for a fib tool. Ours is baked in. You don't pay any extra for that. And it's not 20 grand. Think about it. All the courses and the videos you've seen and the weekend seminars and the list goes on. It's a multi-billion-dollar industry. Selling traders stuff that makes their head spin so that they never actually learn how to trade, because God forbid if they actually learn how to trade, if they actually see how simple it is, we'll never be able to make any money again. If they would just learn how to trade, they could make their money there and they wouldn't have to try to fool people. So why are we doing what we're doing? That's a great question. Because it's an income stream. Yeah, we like helping people. We're nice. And Michael and I did make a promise to each other and God as we were struggling back in 2006. And once we figured this thing out, we were going to create a place where people could come and learn what we had learned. Now remember, at that point, we made that promise. We hadn't learned it yet. We were still working at it. Read any of the books written by the uber rich, the wealthy, old money, from a Rockefeller to a Trump. His money's not real old, but he got it from his dad, or he got some of it from his dad. In their books, they always talk about multiple income streams. You never bet the farm on any one thing. Your multiple income streams, they can be varied and diverse. You could be in real estate, you could be in manufacturing, you could have hot dog carts. If you can develop multiple income streams in a field where you have some level of expertise, it's probably better than having a car dealership and a hot dog stand. Because I know a little about cars and I don't know a whole lot about hot dogs. But if I know people are going to be driving cars for years, and if I've sold a few cars and driven a few cars, maybe even raced a car, I can have a car dealership. How do I diversify in that industry? Well, I might have a Chevy dealership. I might have a Mercedes dealership. I might have a car detailing business. I might have a transmission repair shop. You get my drift? So, I don't want to create any false illusion here in that, we just want to give back because this business has been so good to us. There's an element of truth there, but that's as hokey a reason as it sounds. Yes, it feels good to teach someone who's struggling, just as we struggled, to see things clearly and to become profitable in this business. It's a great feeling. It really does make you feel good. But the cha-ching, that feels good too. And there's nothing wrong with that. Christians for too long have been under this misconception that somehow you glorify God by being busted, broke, sending your kids to school with holes in their shoes. What? The book I read says something completely different. That book says I'm the child of a king. How many kings you ever see send their children to school with holes in their shoes? A good father gives his children good gifts. Now, I'm not preaching a prosperity gospel that says, God wants you to be blessed just so you can be blessed because you deserve it, because you're all that and a bag of chips. No. God blesses you so that you can be a blessing to others. Because as he blesses you and you bless others, you are in essence pointing them towards him. Because they're going to ask you, man, how you get so blessed? I don't know what you got, but I want some of it. Oh, well, here, let me show you where I got mine. Now you're pointing them to him. Remember, Jesus never asks us to go out and get people to recite some kind of an incantation. Another misconception in the Christian community. What he said is, go make disciples of men. Making disciples of men is not something you can do reciting a 30-second incantation. No. Being born again is a condition of the heart. Knowing who created you and who you'll spend eternity with, it's a whole different issue. While we're here on earth, we all have a purpose, we have a destiny. None of us were created by accident. Some of us are walking in the anointing, fulfilling our purpose and our destiny, whether it's feeding the hungry, housing the homeless, building churches, or some of us might be teaching other believers how to do something that's profitable, whether it's selling hot dogs or cars or trading. Why is that important? Because ministry costs money. If you ever had a dream of housing the homeless or feeding the hungry or putting children in an orphanage, you better whip out your checkbook, because that stuff costs money. And I've never seen, now Helicopter Ben promised this, Ben Bernanke, I've never seen $100 bills falling from the sky. Ben said he would do that if that's what it took to turn the economy around. And he literally did, except, well, no, not literally, but you know what I mean. He didn't fly over America in the helicopter the way he threatened and throw out $100 bills, but he unleashed this thing on America called quantitative easing, which we're still reeling from. Like a drunken sailor, so much so, we need a little hair off the dog that bit us. We're getting ready to do it again, they're talking about. At some point, if you give a dance, you've got to pay the band, or they're going to stop playing. What happens when the band stops playing? The people get mad because they're half drunk in their revelry and they want more. And all of a sudden the music stops. It gets quiet. You hear one glass smash and then two, and then before you know it, it's a doggone free-for-all, man. Rioting in the streets, people burning cars, shooting each other at Walmart. Well, it's not Sunday, so I'm not going to preach. I don't preach on Sundays anymore anyway. But here I am, and here you are. I'm getting ready to head into the good word for the day shortly, because we've used up a lot of time. I don't know what happened to John today. Let me check and see if he's out there. He never rang my phone. Probably taking a nap. All right, we're going to let him nap. Let me walk you through real quick. I'll throw the indicators up there. All right, let's push this thing back to Sunday night. Where's it going to be? Right there. Last Sunday night, 6 p.m. Eastern. Price is below the weekly trading zone. Price gets below the BBC. Price triggers our alert to consider being short at 26,370. Where does it look like price is going? It looks like it's trying to get to the zone below. Well, what if it doesn't? What if it only gets this far? You had a great day. There's that trend line. There's that re-entry. There's the zone. Hey, wait a minute. You said this was the S&P chart. Now you're calling it the Dow chart. The indices have a habit of mirroring each other. Yeah, there's variations. Some get out of step, some run up ahead, some fall behind. Globex open, trigger, trend line, re-entry. Globex open, trigger, trend line, re-entry. And then we had another entry right there. Where does it look like price is going? To the zone below. Did it get there? Yes. Did it spike it? Yes. Did it then get back above it? Yes. Did it get back above the BBC? Yes. Then did it beat feet right up to the zone overhead? Ooh, so close, just like the S&P. A little tricky maneuver there. And then, bada boom, bada bing, right up to the zone. Come back to the BBC, it does not hold. We trade below it. Now, which zone's price trying to get to? There's an alert. Price gets back above the BBC, runs right up to the zone, to the tick it looks like. Comes back to the BBC. It holds more often than it doesn't. We find good support. It sends it right back up to the zone. We get above the zone. We take out this swing high. We get long. Boom. Don't quite make it to that zone. Pull back to the BBC. Price always reverts to the mean. We find good support. We catch a really nice bounce. And here we are. Here we are. Russell. Sunday night. Globex open. Trigger to go short. Zone to zone. Get through the zone. Zone to zone. Get through the zone. Down to the zone. Get above the BBC. Back up to the zone. Consolidation. Every time we're above the BBC, we anticipate higher prices. Every time we're below, we anticipate lower prices. Now, we have this is a great example. All right, right now, the Russell paints a picture of a high probability move to the downside. Here's another radio freebie. 1515 to 1513. Now, you see, the Dow's looking bullish. The S&P looking bullish. Russell. The Russell often dances to the beat of a different drummer, but ultimately, at the end of the day, when you look at the chart, you'll see just how closely they parallel each other. And don't get caught up trying to figure out which one moves first, because it's a different one every day, every hour. Okay? Some days the Dow might move first, or the S&P. You just don't waste any, don't burn up any time or treasure trying to figure that out, because there is no one market that moves first. NQ. Globex open Sunday night. Zone to zone to zone. Above the BBC, back up to the zone. Go where the market tells you to go. You don't need $20,000 fib tools. You don't have to go to the academy and spend $27,000. There's a methodology that is quite simple. Well, there's John. All right, let me open up his mic. Hey, John, welcome to the show. John, you just rang my phone.
Hello.
Hey,
hello,
John,
hello.
welcome to the show.
Hi. Sorry.
How you doing?
Thanks. Not too bad, thanks. Kind of busy. Sorry for not coming on sooner. But there's some interesting stuff going on today. One of the things that's kind of pretty surprising is the fact that the grains are actually rallying on this so-called bad news. You know, of the cancellation of the purchases. I think this is a pretty sneaky. You know, it's not so much the beans and the meal. The meal is not moving much, but the beans have definitely gone up.
Soybeans are on fire.
Yeah. They you know, they could be starting another leg up here. I think this is a very sneaky move by the Chinese. You know what's behind it? They think that by doing this, they're going to turn the farmers against Trump and try and influence the election. I mean, that's what's going on here. Can you believe it? By the way, I don't know whether you saw this Hannity show last night, but
I caught part of it. Which part are you referring to?
well, you probably need to really view the whole thing again because there's a lot to take in. But I mean, you know, there's the best clip of the show was Sebastian Gorka, good old Brit, now an American citizen, who is. I mean, it's pretty impressive when a Brit can go all the way from England and become an advisor at the White House. I mean, that's pretty awesome incentive to immigrate. Don't
But I
you
thought
think?
we hated immigrants. I thought we were racist.
Right. So, but anyway, he put it pretty. He just basically said this is an absolute dastardly plot to basically stop. Number one, stop Trump getting elected. Number two, stop him from taking office, and then thirdly, try to remove him from office. You know, and the third in three stages. You know, there was the election, pre-election, and when he won the election, they tried to do it during the transition and set up all these. You know, and I mean, look, why do you think they didn't want Flynn to be the DNI guy or the strategic advisor? Because they knew that he'd expose all this stuff. And you know, why do you think they didn't want Ratcliffe to go in there? Because he's a demon. You know, he's a demonic kind of investigator type, and he would have unearthed all this stuff and you know, at the head of the whole, you know, all the agencies, he'd be a pretty powerful guy. So they're scared to death of somebody coming in and really, you know, uprooting the deep state, if you like, you know, yeah, the beans are going. So maybe some sort of a deal is going to be worked out with China. Maybe they need the grains after all, and then maybe they're going to have to buy. So, but I mean, the real story is that the swine flu thing over there,
Right.
has drastically reduced demand for grains, and so it's not, you know, it's not necessarily the Chinese being particularly vicious, if you like, but there was a clip this morning that Trump threatened to cancel the September meeting, and that's what tanked the market earlier on. But actually, the market, in my view, is, you know, somebody just asked me, they wanted to buy the VIX a couple of hours ago, and I said, don't do it. I think the market's going to rally this afternoon, and almost a few minutes later, it started rallying. So, and if you remember yesterday, my sign-off on the show was be very careful of where we were at that time, because it looked like a three-wave rally.
Right.
And, you know, look, the way the market works is when it looks like a duck, maybe some of the people sold yesterday afternoon or in the night, because about 10 o'clock at night or 11, I was watching business, the business Fox thing, and they had the news on, and I saw that. I thought it was an old clip from. Because the Dow was down like 150. I couldn't believe. I said, "Holy mackerel!" I had to go in and check to see if it was real, and because we went out so strong yesterday,
Right.
and I did warn. There might be a downturn, so we were down about 250 this morning, I think, but we're cutting the losses right now, and actually this is potentially creating a kind of a cup handle, a little handle here. So, and we're consolidating nearer the highs of the range. So it sort of sets us up for a continuation to the upside next week. Actually, it's not as bad as it looks, especially now that we're starting to rally. But if we invert later on, I mean, if this rally, see what I mean?
Mm-hmm.
It doesn't look too bad, but especially if we, look at that weekly trade zone, if we get up above that, and start hitting the next one, then it's a really big deal. Let's have a look at how the week looks. How the week looks on a weekly reversal basis.
Which market, John?
The one is that on this one, the S&P.
On the S&P, yeah. Let me just pop over here let me hijack this chart. This one.
Let's look at the daily first and then the weekly.
Okay.
So.
All right, let me shrink some of this other stuff down. Get it out of the way. Come on. There we go. What's going on? My select all tool doesn't seem to be working. There we go. Ah.
There you go. Yeah, I mean, you can see that it actually looks quite constructive. That sort of test and that doji deal, if we go a little bit higher this afternoon, that could turn into a green doji.
Yeah, we had a 62% fib retracement here on the day.
Yeah. So the week?
The week coming up. Go.
Wow. Yeah, boy, that's bullish. Jeepers.
Yeah, it's pretty bullish, yeah.
Yeah, look, this thing could skyrocket next week.
Sunday night, Globex Open. It should be pretty interesting.
Yeah.
Looking forward to it.
Yeah, that's a pretty rare deal, that doji, especially if it goes green today.
Mm-hmm.
If we can get a late rally, that will be super bullish. Super bullish. So the gold continues to hold about 1,500. It's funny, I talked to a Swiss fund manager this morning, and these guys weren't even looking at gold a few months ago, Now they're telling me, oh, it's going way higher, So that's kind of an interesting, it's gotten people's attention, and I talked to another fund manager yesterday, and this guy he's a niche player. He's does special deals on IPOs and things like that, and he says, "Oh, I don't pay any attention to gold, the commodities of gold and silver." And I said, "Well, he's very interested in rare earths, and one thing." And I said, "Well, you better start, because this gold is going to be a big story over the next few years for sure, and it's probably going to be the number one performing sector for probably the next 4 years, and it's going to be an epic ride, frankly." And there's almost nothing, unless the world changes drastically, and that's not going to happen. The gold price is virtually in a very, very strong uptrend that's going to continue. This is just the opening saga right
salvo,
now.
yeah. Right.
Yeah. So a guy I talked to yesterday, who's a good gold analyst, also, he thinks that we will, we might be seeing a turn in the oil right here. It's just getting a little bit of support. It's been beaten down, but it is turning up, and this could be the beginning of another rally in the oil sector. And the dollar is still hanging in there. But, one of the things, I've said this for a while, but I probably didn't say it strongly enough. When gold and the dollar are going up together, like they are at the moment, oh wow, that dollar does look jeepers. That, what might push the market up next week? The dollar tanking. If we is that a weekly or a daily? What's that?
That's a daily, John.
Oh, the daily, right? Okay. Yeah, boy, that looks pretty. If we break down below that 97 area, 97 and a quarter, this thing could take another leg down, pretty fast leg down. That would probably get gold up to about 1550, which is my next target, and that's a very critical area because, that 1550, 1560, based on the December futures chart, will put us to a new contract high. I can't tell you how powerful that is. This isn't a new contract high, where the market went down for half a year and recovered for half a year. This is a new contract high that's going to be taking out a 6-year high. It's a 6-year deal, this chart. And that is just monumentally bullish. So going to a new contract high on that chart is going to open the way to doubling the range of that chart. It's just the way the world works. These new contract high situations don't come around very often. And when they do, there's a range extension to the upside that's almost always double the actual range of the actual contract, the whole range of the contract. So doing the math on that, it's 1085 to 1550. So that comes out to a little bit more than it's somewhere in the 450 area, something like that, 470. And you add that to the current price, and you can definitely see 1950 is in the crosshairs. So, and by the way, new contract highs very often are super dynamic, very bullish indeed, and so you could really see an upside streak of tremendous proportions on this gold. And obviously, if the dollar breaks down from here, we start heading down to 96. I mean, if we take 95 and a half and start heading into the 95, 94, 93, that will send the dollar, send gold substantially higher. And it's also going to send the oil price higher as well. And it's probably going to help the emerging markets start to recover. And it's going to be the beginning of a worldwide recovery or boom of monumental proportions. Actually, we're. I mean, think about it. That EMM chart we looked at. We're breaking down to new 52-week lows on that chart.
What was it again, John? EEM.
EEM, yeah.
Yeah. There we go. That's a daily.
Right. Can you go to the look at the. Okay, can you put the weekly up? Actually, the weekly I think would be pretty interesting.
There we go.
Yeah. See, it may be a kind of a head fake that thing. In other words, in a perfect world, let's just say if we gapped higher on Sunday night and going into Monday and left a little island weekly bottom there, that could turn everything much more positive. Incidentally, the Chinese bailed out a bank last night for $200 billion. $200 billion. They nationalized it.
Wow.
So, and there's another 20 banks like that that are allegedly insolvent. So, this is where, if anybody has listened to Kyle Bass and heard his analysis of this sort of Asian. Incidentally, look at see how we rallied off the 19 bottom there, that they had double bottom back then, right? See that?
Mm-hmm.
Yeah, and we rallied up. We've had a three-wave pullback. You know, if we were to reverse back up here and start going back up above 42, 43, 44, you know, this thing could really actually move dramatically higher later this year. If you go to the monthly,
Here we go.
okay, you know, imagine looking at that, you know, and by the way, look at the 16 bottom and see the first, a pretty strong bull market. This is a pretty, harsh pullback, if you like.
Mm-hmm.
But if we suddenly took off and went 44, 45, we could be looking at the beginning of a 2003 type up move in all the emerging markets for the next like 10 years, literally, or, you know, the next 5 years, say. With a weaker dollar, with 4 years with a weaker dollar. And look, the dollar is overdue for a downturn because, these cycles are generally pretty reliable. This is the first time the dollar cycle has gone a bit out of kilt, but it's not necessarily invulnerable to a downside death spiral, if you like, because there's plenty of reasons why with the debt and everything else. And the Trump administration wants to get the dollar down. You know, they would love to get a weaker dollar right now. I think the penny's kind of dropping over there. That I hope they're being advised. The best thing that could ever happen to Trump right now is a weaker dollar. I mean, it's just because it's probably gonna, if the dollar went down 20-30%, I mean, we'd have a market rally of probably 20-30% or more, and nothing could be better going into the election, going into 2020, and potentially resulting in a very strong economy towards the end of 2020. That would be just epic, frankly. So,
anything else you want to cover, John?
No, listen, on that note, I hope everybody has a great weekend, and look forward to catching up with you next week.
All right. Thanks so much. Look forward to it. Have a great
All
weekend.
the best. You too. Bye-bye.
All right. Bye-bye. Okay. Week 53 so far, Concierge Trade Alerts had 100 alerts. 16 of them simply never triggered. 15 of them were stopped out. And we'll just take a peek-see real quick here. Last week, which was our CFRN's been on the air since 2005. We've been publishing the Concierge Trade Alerts since December 14th of 2009. And we just had our 1-year anniversary of Logic 247. That is our 24/7 Emini alert service. We go to work Sunday afternoon, 6 p.m. Eastern. We don't take our foot off the gas until Friday afternoon, 5 p.m. Eastern. So last week, in celebration of our 1-year anniversary, we had 58 alerts. 5 of them never triggered. That left us with 53 actionable alerts. 35 found their target, final target. 8 of them found at least the first target. 10 of them were stopped out. 18.87% of actionable alerts were stopped out. That's the truth about trading. Week 53 this week, if you see a thumbs up, it means we reached our price objective. If it has a PT next to it, it means it got to at least the first target. And if you see a red X, it stopped out. So these are last week's numbers. Again, this week, so far, we've had 100 alerts, 16 never triggered, and you're going to see little Z's by those when we scroll by them. And then the red X stopped out. So Sunday night alone, this past Sunday night, starting here. Now remember, most folks don't even think about markets until Monday morning at 9:30 a.m. Eastern. This all took place last Sunday night. That's quite a Sunday night. Comes Monday. See that little Z's never triggered. Now we're into Tuesday. Well, there's a rough patch, right? Here comes Wednesday. Comes Thursday. That was a sleepy patch. And today. There you have it. Week 53 so far. 100 alerts. 16 never triggered. 15 were stopped out. So, if I do the math, we'll call it 18%. That represents 18% of alerts were stopped out. Over the past year, we've enjoyed an average of 20% of alerts stopped out on any given week. Most folks like to brag about their percentage of wins or profitable alerts. Hang on, guys. I'll be right back. Hello? I'm sorry? Oh, no problem. Okay, I'm still on the radio. I'm still on. Yeah. Okay, no problem. Okay. Misdial. Okay. I don't even remember now. All right. Good word for the day. That is Friday. A little rest. Hang on. First Peter 2:21. He is your example, and you must follow in his steps. Hey, you too, Dewey. In the midst of his problems, Job said, he knows the way that I take. When he has tested me, I shall come forth as gold. Gold is hidden deep in the earth. It takes hours of back-breaking work, removing tons of dirt, scoop by scoop, to bring it to the surface. Likewise, crucifying the flesh is excruciating and time-consuming. And when you follow Jesus, you give him digging rights. Now, the enemy tries to bury your treasure under memories of past sin and failure, but God keeps on digging because he's going for the gold. Joni Tada became a quadriplegic after a diving accident. She writes, often during a single day, I'll have to make 26 different adjustments in my wheelchair. Sometimes I think I'll drive me and my friends crazy. That's when I remember John 16:33. To this you are called, because Christ suffered for you, leaving you an example that you should follow in his steps. Jesus said that in this world we would have trouble, and that it has been granted, that is, gifted, on behalf of Christ, not only to believe in him, but to suffer with him. I know some days I don't want that gift. But if Jesus learned obedience through the things he suffered, Joni writes, then I can learn from 26 different adjustments to my sitting position. God desires intimacy with us, but on his terms, not ours. Remember, you were created for a divine purpose and destiny on his terms, not yours. And those terms sometimes require us to be more than a little uncomfortable. So the next time you get hit broadside with a bruising disappointment, whatever it might be, just remember that God is asking you to follow in his Son's footsteps. What did he say to those fishermen? Come and follow me. What's he saying to you and I today? Come and follow me. I gotta run. I must be about my Father's business. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. And I'll see you at the bell.